starting with more or less the weekly news. You can see Monday we don't have any news. Okay, you might think this is good, but yeah, you all can see on my screen as well. But for me, I would say this is not as good as I would hoped. Just because, as you all guys know, I trade a thing called the STA model, which is my own model, and it does not often occur during um, when we have like low liquidity or low volume in the market, right? Because there will be no major volatility and no major news drivers which will more or less give us that influx of liquidity that ultimately drives the market, right? So I don't think we will see any STA setups on Monday at least. Tuesday looking really good, but we'll go into Wednesday as well, and that's why I think Tuesday will ultimately also be bad. And I'll talk about which 2 days I ultimately think is the two best days for you guys to trade this week. So the two major days which you should focus on. But Tuesday, I'm gonna more or less just look at the market. If I see an STA setup, I'll take it on Monday. But I just don't think the market will be as good on Monday as you might expect. Tuesday, okay, we might see some good movement, right? We have these news drivers, which will ultimately be good. But when we go to Wednesday, okay, you will ultimately see that we have for AUD, for the people that trades AUD USD or some AUD exclusive pairs, you will see that we have CPI, quarterly, or for quarters, and also yearly CPI. And we also have CPI quarter to quarter, trimmed mean CPI. And this will ultimately, like, you should stay away ultimately from all AUD exclusive pairs. But here's the thing, we also have FOMC. What this means, I just jumped and skipped this because this is just normal news drivers. But here's extremely dangerous news drivers, okay? You should not trade for the whole of Wednesday, not any pair. You should just more or less skip this whole day and just let Wednesday play out. Like, even if you see a good setup, don't take it. At least you can forward test it, right? But I would not say to you guys to take a setup because there's gonna be a thing called manual intervention, which is a thing a thing named by ICT. So it's just when the market more or less delivers differently from what you used to see, right? So that was simply, in simple terms, that just simply means that you would not have probable market conditions. So not so good trading conditions, right? So Wednesday, you should ultimately just skip the whole day and not even look at trading on Wednesday. But Tuesday and Monday is okay. Tuesday, this is why I don't think we will at least see none of my setups, just because on Wednesday we will have FOMC, which will ultimately also impact Tuesday. It will impact the whole of Monday, Tuesday, and forward to Wednesday, right? So until the news have been delivered to the market. So ultimately, I will try to stay away. Like, if I see a good setup on Monday or Tuesday, that would be an exception, right? But anyways, I will not trade any SPs. I'll not trade. I'll try just stay out of Monday and Tuesday as well, and just wait for these. And I will, for all of you guys, remember, for the people which have been with me previously, remembered that I more or less do FOMC streams when I more or less predict what FOMC is going to be, and more or less just tape read what happens in the market, right? When FOMC delivers. So we will have a stream for everyone, so everyone can join in and just look at how FOMC plays out, because it's a crucial underlying dynamic of the DXY. So that's why it's just so important for you guys to listen in and understand what they say and what they talk about, because it's ultimately the most important thing for the whole financial system as a whole. Anyways, Tuesday or Thursday, I'm sorry for my English, we have just a normal trading day, no special things. We have bow monetary policy, so maybe you should stay away from GBP pairs. This will of course also impact euro, the euro. Oh, and we all have also non-farm payroll. Oh, wow, this day is gonna, or this more or less week is gonna be crazy. Anyways, yeah. So Thursday I might trade. We will see. But just because we have non-farm payroll, that will also impact Thursday. So, and Friday I'll just completely stay out of. So maybe this week, right? I will not trade. I will not take a single trade. So last week, if you guys remember, I did not take any setup. Okay, we did not have any. We had some STA setups, but I missed all of them, unfortunately. Some of my students took them, but I managed to miss all the STA setups that occurred during last week. And this week is maybe going to be the same, but this week I'll also have a decision going into it, just because it's not probable market conditions this week, I would say. Right? I don't trade high impact news, so when we have FOMC, I don't trade for that whole day. And that whole day will also impact Thursday, Tuesday and Monday, right? So there might be some exceptions here. Wednesday I'll not trade. Tuesday or Thursday, I'm sorry. Thursday, okay, I might take a setup. We will see, but I'll stay out of the market when these news are occurring, because this will still have an impact on the euro and the USD. And Friday, I'll not trade for the whole day. So yeah, like it's gonna be crazy. But now let's just get straight into the charts, so you can see. But it's really good that we have talked about one of the underlying dynamics, right? So let's just go straight into the DXY. So right here we are on the weekly chart of the DXY. As y'all can see, really nice, right? So what we have done, simply, I'll just go through this like always. So what we have done is that we simply have traded up, okay, broke down because of this algorithmic order block. If you go into the daily, you'll see right there that we reacted off of a new week opening gap right there, continued lower, made this this is a breakaway gap, right? Oh no, rejection block, I'm sorry, here. And we also have this supporting price continue lower. We are bearish on the weekly time frame, right? So we have a market structure shift right there. We are overall bearish on the weekly time frame. So yeah, anyways, looking here as well, you can see that we started reacting off of this. You can see right here, if you just make this weekly fair value gap or busy, you can see that we ultimately closed above the 50% mark, or the consequent encroachment of that fair value gap, which simply means, okay, that we have switched to a more bullish order flow for the time being. You can see that these weeks also continued closing upwards, and I'll explain overall why that is. And when we go to daily, what this is as well, this was the drawn liquidity right there. We missed the draw liquidity. I still have it. I'm still going to use it later down the line, or we can use this as a draw liquidity later down the line. So what I'm thinking here is that we simply, because this is equilibrium, right? We have a premium here, a discount here. So what the market is doing, it is simply just repricing to a premium stance. What that simply means is that it wants to take out some buy side liquidity on the weekly time frame here into this CB, and then continue lower. Continue with the higher time frame order flow, which is bearish, right? So I'm seeing this. Wait, I'm sorry for not having full screen. Now you may be seeing it better. So I'm seeing this. So price will continue up into a premium. First premium liquidity structure is this fair value gap, right? Over this. This is relative equal highs, as you see. Okay, so what the market is doing, it is repricing to a premium, taking out buy side liquidity, trading into this fair value gap, depending on how bearish we are. Because I'm thinking that we might react off of the 50% mark of this, but we might also react off of the 25% mark of this fair value gap, and then continue lower into my ultimate, or this is my ultimate drawn liquidity, but this is my intermediate drawn liquidity, because I always have 3 drawn liquidities. Here's the lower time frame drawn liquidity, where I'm seeking the weekly extension to be, okay? Here's the intermediate drawn liquidity, and here's the ultimate drawn liquidity. So I'm seeking this first, lower time frame, intermediate, and then I hope it's going to go to this ultimate drawn liquidity. Okay, this is a really high time frame, right? But hopefully you all understood what I'm seeing on the weekly chart. Write yes in the chat if you understood. Perfect, perfect. Anyways, let's just go straight into the daily chart. Oh, sorry guys. What is happening? I have to do this. Anyways, here's the weekly premium as I talked about. Here was the weekly fair value gap, as you can see. But now it might catch this. Okay, now this might catch your eyes. Okay, so what this simply is that it's a market maker buy model, exactly, which has formed on the weekly, and this is really good for us because we might expect bullish prices up until the weekly premium right here, and then we're seeking some lower prices after this, because we are ultimately, right, we have bearish on the weekly, right, but on the daily we are actually bullish with this market structure shift right there, and we are actually bullish order flow, and the market has left these liquidity pockets. You can see here's the original consolidation, what you call an original consolidation, left this. So what I'm trying to tell you guys is that when the market is leaving consolidations, okay, then trading down aggressively, continuing with the bias, right, and then doing another consolidation, leaving it, okay, and then reacting with an liquidity structure in a deep discounts, and then wanting to reprice into a premium, that's a market maker model, and vice versa, right? So here's the SMR, smart money reversal. You have the consequential encroachment of this fair value gap, of this bullish fair value gap right here. It was the drawn liquidity, missed the drawn liquidity by like just some pips, which I previously had, and now we're repricing upwards into a premium, into a weekly premium fair value gap right here. And yeah, and we're just in this market maker buy model. What this simply means is that I'm thinking price will just leave this box, okay. We might, for the students that is in the students that is in the mentorship, we might see this, okay, we might see this. It leaves this, forms this STA setup or ST model right here. We take this STA model, ride this up, okay, and then more or less it continues lower, right, into the ultimate drawn liquidity like this. This is what I'm thinking, because we are ultimately bearish on the high time frames, and for other underlying dynamics, which I will talk about later down the line. I'm sorry for the background noise, it's my dog. Yeah, exactly, it might be a slight manipulation to the downside. And when do you guys, because now I'm asking you guys, and then I'll talk about it, when do you guys think we will leave this consolidation on the buy swing, or exactly FOMC? So yeah, so I might see this on FOMC, we pump up, right, leave this trade into here, and then maybe on Friday we might just trade down, right, so start trading downwards, and then I will continue with the bearish bias, because ultimately we are bearish. But I'm just trading, not trading market maker models, but I'm just seeing market maker models, or using as market maker models to see bias, so, or to use as in bias, right? But yeah, so I'm seeing that price will sweep this buy side liquidity, so I'm having this as the high of this as the drawn liquidity for this week, okay? drawn liquidity for this week. That simply means that I'm seeing price move higher and taking out this buy side liquidity, moving into this weekly fair value gap in a premium, right? This week, okay? That's what I'm seeing this week. And I might not take a setup, like, because I need a setup for me to enter here and ride it up here. So yeah. Exactly, the target tank, 100%. And you just choose your own re-entry model, right? So you could have market maker model with STA or market maker model with a silver bullet or something like that. Exactly. But that was what I was trying to explain to you guys. So I just use it for bias. Anyways, and that's why it's so good. Exactly, you just mean. Anyways, right here on the 4-hour time frame, you could see it much more clearer. You can see the original consolidation. Here's another consolidation. Here's another consolidation, and here's also another consolidation. Here's the daily fair value gap. You can see it reacted off of the 75% mark right here, and here's also a new week opening gap, which I will talk about. Here's a new day opening gap. We don't need to use this, but you can just see that we reacted off of this on the daily time frame. And yeah, I'm just thinking that we will leave this simply. And why? Okay, this is why we have had such bad price action for the past 2 weeks. You can see we have been in this consolidation for the past 2 weeks. And this is simply why we have seen this bad price action. It's just because the DXY is in a consolidation. Okay, if you guys don't use the DXY when trading, you're just trading blindly. Okay, that's just straight up gambling, I would argue, because I'm just so into this. But yeah, anyways, let's just go into the 1-hour time frame. So on the 1 hour, you can more or less see this new week opening gap. We'll use this for, you see here also how it reacted off of it. Here's a new day opening gap. We don't need to use it, but new week opening gaps you should use for 5 weeks, right? So what I'm just seeing is the same thing. That we will leave this, move into this premium. So yeah. Anyways, now when we have gone through this, we can just see that the 4 hour we don't have any clear bias. 1 hour is the same, but the weekly was bearish, right? Like I told you guys, daily is bullish. 4 hour don't have a clear bias. 1 hour don't have a clear bias, but we have the market maker model which we rely on, right? Honey Badger maybe, but if you think of the underlying dynamics, okay, on Monday we don't have any special news drivers, right? So on Monday we most likely will continue this consolidation, right? Tuesday we might also continue, we might form a setup, right? On Wednesday is when we move out of it. I think that's what I'm thinking. Just because of we have FOMC, right? So I'm seeking a bullish FOMC, right? So they talk about higher interest rates and everything, and this matches up with the fundamentals if you think of what is happening right now in the world, right? Because there's a lot of uncertainty right now in the world. More uncertainty, and especially with the shipping lanes restraints, which is happening now with the Houthis and more or less like the shipping lanes that gets more or less exactly. So like it's not about that, okay? Because everything is about interest rates. So what happens? This I've talked about with the students for like 3 weeks. I'm sorry for my English, but I'll try and explain this as good as possible. So more or less, what I'm thinking is that because of the supply line strains, which will happen because of that ships will not more or less, or companies is afraid of moving through the Strait of Hormuz, which is where the Houthis are firing ballistic missiles and also ICBMs and drones at normal commercial ships, cargo ships. The companies will decide to take another route through like Africa, right? Like going down through Africa, I can show you with like a world map, but I don't need to do that because we don't need to go that far. And this will more or less make the prices go up, okay? Because the supplies will take longer to reach their destinations, right? And if you think about it, okay, that will simply lead to that the demand is same, but the supply is straight, right? And that will more or less lead to that the prices go up on the supplies, right? Which means that the inflation rises, and when the inflation rises, that simply means that they will higher the interest rates. So they will talk about hiring the interest rates. That just simply means hawkish. They will be more hawkish and talk about more hawkishly about hiring the interest rates, which simply means that the DXY will go up. And this matches up with the charts. This matches up with what we think. And this also ultimately matches up with our bias, order flow, drawn liquidity, and everything like that. So everything matches up, right? Now, I'll not talk about that this time, okay? We might have a different talk about it, the target tank. Another talk about it later. Like in another, but now I'm trying to be like as serious as possible. Anyways, you guys, let's just go straight in. Now when you have this DXY correlation, which we have looked at, now we'll just go straight into Euro USD. And now remember what we have talked about on the DXY, and more or less translate it to EU, right? So you can see and have a much more clearer bias and draw order flow and draw liquidity when utilizing EU if you're trading EU. And we'll also go through AU and UJ. AU is going to be really simple because it's just such bad. Anyways, let's just go straight into the weekly charts. So right here, you can see that we are bullish, right? We have left this. Remember, DXY was bearish on the weekly time frame. If you remember, weekly bearish, right, for the DXY on the weekly time frame. And you can see we have moved higher because risk on, risk off, okay, if you all know what that means. But simply, when the DXY moves lower, EU should move higher. Pretty simple, right? So what we have done is simply we have reacted off of this fair value gap right here, right there. Closed below that fair value gap, you can see we closed below that. That indicates really bearish order flow, that we continue with the bearish order flow. And I will just continue lower. Here's going to be my drawn liquidity. I'll talk about why this is going to be my drawn liquidity when we go into the daily chart. And you can also annotate this fair value gap if you'd like, right there. Anyways, let's just go into the daily chart. So you can see right here that we reacted. Here's also ICT week theory for those who like it. You could also argue that we reacted off of this, and it's most likely a combination of the both. But yeah, anyways, here's the drawn liquidity. You can see much clearer here. So we moved higher. Exactly, we moved higher here into this week theory or fair value gap on the weekly chart, whatever. And then we have the original consolidation here. We're looking for a sweep of the buy side on the DXY, if you guys remember. And that simply translates into that we're looking for sell side off of this original consolidation on EU. Okay, here's also a thing you can have annotated. I have this annotated. I don't think we will move higher than this for the next week. We might just take out this or this buy side liquidity before moving and taking out this sell side liquidity. And after this sell side liquidity, I may be seeing higher prices on EU. So after this, we have taken out this. Okay, this all depends on what the DXY does. This is why we utilize the DXY. Because when we move lower, take out this, we might react off of a bullish PD array or bullish liquidity structure and just move higher. And it all depends on what the DXY does. If we just look at the DXY again, so you guys can understand what I'm looking at. I'm looking at this, going to the weekly chart, going here. If we see the DXY move higher, take out this buy side liquidity right there, and then react off of the 50% cost quality encroachment of this fair value gap, and then move lower. Okay, we're gonna see EU moving higher. First lower, taking out that drawn liquidity, and then higher, right, like this, and taking out this, because this is gonna be my ultimate drawn liquidity right there. Hopefully you understood this. Anyways, let's just go into here. You can also have this annotated. I said we're not probably going to move higher than this, and you can probably use this as the week theory. So you could probably use the consequent encroachment of this week, because that's the highest that I'm seeing the market move this next week. Anyways, the 4-hour chart. Let's just go straight into it. So you can see where we reacted off of this order block right there, and like you can also argue this fair value gap, and we are just continue lower for the 4-hour, but ultimately it's just really consolidated. This is why if you look at the DXY again, you see that we have been in this consolidation, right, on the DXY for 2 weeks, okay, and that's why EU has been moving so strangely as well. So what I'm seeing is that we take out this trend line liquidity right there, move lower, take out this next week. This is for the next week. Monday we just continue this consolidation, move higher, like have a higher consolidation probably like this. Just consolidate here. And Tuesday we might pump up with the news into consequent encroachment of this week, right? If you remember off of the weekly chart, and then continue lower, taking this strong liquidity with the FOMC, and then we'll just see. But this is probably what's gonna happen. 1 hour, nothing special here as well. Like I can go on and on talking about period race, how it reacted, but it's just gonna be pretty boring. What I can mention is that we had a really good STA setup, which I missed. It was this STA setup, I think. Wait. Yeah, this was the STA setup. Wait. I'll just do this so I can see it on the 4-hour chart. Talk about it. Yeah, so it was this, and then we made another STA setup. I missed every STA setup, so yeah, it's just crazy, right? But yeah, that was pretty rough week. Did not take any setups. This next week I might not take even any setups. And yeah, let's just go straight into AU. There will not be as much to talk about AU as I talked about EU and the DXY. Of course, DXY, I love it, best thing in the world. But yeah, here AU, pretty simple, right? Same as EU. Okay, we were bullish on the weekly chart, right? Here's the weekly sell side liquidity resting here, which I have as draw liquidity. I'm seeking price, taking out these. It's actually equal lows now. And this will maybe happen even before EU, because if you compare them two with market relations, you will see that EU is much stronger, okay, than AU. AU is much weaker, which simply means that it's taking out more sell side liquidity, and this is just because we have already retraced a bit, taking out a lot of sell side liquidity here. And or you can compare it to AU. We just had one down closed week. To EU, we had 2 down close weeks, right? So we have already prior taken out a lot of sell side liquidity on EU, so it does not need to take out as much as AU, because AU needs to take out more sell side liquidity. Because what I'm seeing after this is simply that price continuing higher, taking out this. Okay, this matches up what we're seeking on the DXY, right? We're seeking that it moves higher into this fair value gap, right? Then moving lower, taking out this ultimate drawn liquidity and this intermediate drawn liquidity, right? Pretty simple. Anyways, on the daily, right, there's not much to talk about. We just continue lower. Next week, I think we're also going to continue lower, taking this equal lows. So it's going to be just a pretty simple, maybe moving into this fair value gap, this BC right here. yeah, you could also see that it's more or less in the culpable encroachment part of this. But yeah, like we're bearish also on the weekly we're bullish, daily bearish, 4 hour just consolidated like the other pairs like EU and also the DXY, and this is just ultimately due to the DXY, right? So everything is due to the DXY. Yeah, like nothing special. 25% mark of this week you could utilize. I'm not seeing price moving higher than the culpable encroachment of this, so you can have this annotated. So I'm not seeing price moving higher than this prior week. When if we get bullish news, right, after or prior to bearish news. So on Tuesday we might get bullish news, taking out all of this buy side liquidity, resting above here, resting above this primary high, and then moving into this, and then moving lower ultimately with FOMC, I think. Anyways, UJ gonna also be pretty simple read, right? We are actually bullish now, so market relations to this translates that the weekly may be going to be changed bias, and that we may be going to just continue lower on EU and AU, right? And the DXY will just continue higher. Okay, I'm not using just the lower time for drawn liquidity. I'm also using the intermediate and ultimate drawn liquidity, because that's simply, and also market relations, right? So UJ has been acting really bullish. It is ultimately bullish. You can see we have been going higher for a long time. So it's like if you compare with the monthly, you see that we are really bullish, right? And that's ultimately why I think we are really bullish, and we continue bullish for another week. I think at least another week. Um, so yeah, we have reached this, taken out this daily buy side liquidity here, traded up into, not even traded up into this. Yeah, but I think we will trade up into this, maybe even taking this and even taking this, depending on. But I'll just have this annotated. So I'm just seeing more bullish prices. You can see we reacted off the 25% mark, more or less, of this fair value gap right there. And I think we'll just continue, just because the weekly is bullish, the daily is bullish. 4 hour, nothing special, right? It's just consolidated like the DXY. But yeah, DXY will continue higher. UJ will probably continue higher for another week, same as the DXY. EU, AU will continue lower. Nothing special. Like, I can go on and talk about things that happens in the 1 to 4 hour, but the daily and weekly is what you should mostly focus on this week, because then you'll see. And ultimately, I've talked about when I'm trading, when I'm not trading, so you understand when to trade and when to not trade. Of course, everything is personal preference, so if you like a certain thing, go for it, right? But I would not recommend at least trading Monday and Wednesday and Friday, because we have non-farm payroll. I don't trade those days. So, but the rest of the days could be exceptions, right? I'm thinking I will stay out of this whole next week, but there could be exceptions, right? If I see a really good setup, I will take it, of course, and that would be an exception. But that's it, right? Hopefully this was insightful.